Hello everyone and welcome back to another video. So this one is going to be one of my favorites I have ever created just because it goes over my experimental portfolio that has made almost 73% return since 2018. This is a portfolio that is in a retirement account. It's in a traditional IRA, and I have only used the original money that I put in, and I have not put in a single dollar since 2018. I literally just let this grow for as long as possible. And it has just done enormously well and outdone itself many times over. I literally just let the dividends be reinvested, and the value has just gone up immensely. And I wish it could be so simple that this simple two position holding portfolio could be a model for what I would do with all my money, and maybe that's what it will be one day. But it is a very high concentration of risk. It's very risky, but so far, like I said, since actually 2019, not 2018, since 2019, this is basically this portfolio has gained about 73%. I can definitely show you. You just have to comment, and I can, put up a photo of my actual gain to show you that I'm not lying. So about 73% in a little bit over, in almost 2 years since 2019. That's pretty good. And like I said, I've not put any new money into this. It is completely from its own, start, and just dividends reinvested. That's it. Its own growing value and dividends compounding has made it gain about 73%. So, as you can see from this screen, one of the stocks that I own, this is one stock and one ETF. That is all this portfolio is, and it has gained 73% in, like I said, about 2 years, in the last 2 years. One of the stocks, the only stock in this portfolio is Microsoft. I bought it at, I bought the initial Microsoft shares when they were at $135 a share. And now, as you can see in the upper corner here, they're at $257 a share. And it has been, dividends reinvested at different amounts at different share prices. So it has been, a crapshoot. It's whatever, the price has been. So far, every single time that the dividends have been reinvested, it has bought shares at a more expensive clip than the previous session 3 months before in the previous quarter. So with that being said, like I said, it does help to start out when you're buying at $135, and so far my cost basis is $137. That's a total. That includes all of the dividends being reinvested at different clips, like I said, at different stock prices throughout the way. And yeah, so my total cost basis for Microsoft is $137. That alone has gained 87% in this portfolio. That is absolutely insane. That's astronomical, and that's way more than I ever thought I ever would. So that's crazy. And next, well, let's do a little stock analysis. So Microsoft itself is expected to continue to go up. It has 26 buys, 0 holds, and 0 sells, making it a strong buy rating. That's pretty incredible, and it has an average price target of about $297, about 15% upside, and a high target of about $340. Even the low target of 270, that's usually a pretty good, handle. These people at TipRanks, all it is just gathering all the different analyst estimates, and that's pretty good because that's still, about $13, about $12 away from where we are right now. So that's still pretty good. The stock analysis of Microsoft itself is a 10. It's a 10, and it makes sense. It's just going to keep going up. As far as Microsoft's internals, its financials, we can actually see that here. Microsoft has very solid financials, and we'll just look at the income statement as part of this, and then I'll get into what the other video is that I. So this is the income statement, and as you can see, Microsoft has continuously grown their revenue from as little as 93 billion in 2015 to about 143 billion in 2020. It's pretty crazy, and their net income has also grown significantly as well. From, like I said, about 12 billion in 2015 to about 44 billion in 2020. So this is just all this means is it's going to continue to rise. So Microsoft is a growing, not really a growth stock, but it's more of like a mix of a growth and a value stock, and it's just going to continue to go up and up. And so is the share price, and that's just going to in turn make my portfolio just grow even more. And so it's a good feeling, because it's good knowing that it was a good investment to start out, which is why this portfolio has such a high return. Now, the next thing that I want to say is the ETF that I own. This is a 50-50 portfolio. 50% is in Microsoft, 50% is in SCHK. SCHK is the Schwab 1000 ETF. It holds 1,000 stocks, and it's all based on market cap. So with that being said, Microsoft is also owned in this ETF, but it also spreads out the weight, and it actually works a lot better, and I'll get to that in the second tab over here, the second back test. It actually works a lot better than owning the SPY, or the the S&P 500 ETF. Owning the Schwab SCHK, the Schwab 1000, has been better price-wise. It's only about $40 as of today, a share of an ETF, and the SPY is like over 300 something a share. So, and you also get a better dividend rate with the Schwab 1000. And you also have a lower fee too. It's a lower fee to own it over its life, or over annual, net fees. So this portfolio itself, if you're just to, have invested starting in January 2018, your $10,000 balance would be about 23,000. That's almost a 29% compound annual growth rate. And that's nothing to sneeze at with just two holdings, two positions in the portfolio. Again, 50-50. So that's pretty good just to own two. Yes, there's a lot of risk, but at the same time, there is, a lot of reward that you gain in about 29%. Adjusted for inflation, that's still an almost 26% annual return, and that is crazy, your compound annual growth rate. So let's see, from 2018, again from January 2018 to May 2021, this is how your balances look. In the first year in 2018, you gained about 7.86%. That's pretty good considering, like, the Schwab 1000, that actually reflects what the S&P basically did, which was a negative number for the year of 2018. 2018 was a negative year. Microsoft did very well in 2018 with about almost 21% return. So to have this kind of a return in a portfolio is actually pretty good for 2018, considering, again, the overall market was down. You beat the market by quite a lot, by 12 basis points. Next year in 2019, a 46%, 2020, 33%, and again, you're still beating the market overall. Let's just say that the SPY was about, again, it tracks about the same. The Schwab 1000 versus the S&P is still about the same. So let's just say that this was the same for the S&P. You're still beating the S&P. This right here in 2020, you're beating the S&P. For all intents and purposes, and we'll actually see in the next tab how well the SCHK does versus the SPY. So again, 2021, you're doing pretty well. You're just barely above the market, but you're still beating it. Let's look at a portfolio of the Schwab 1000 versus the SPY. Again, it's a $10,000 portfolio balance, and it starts in January 2018 because that's the time frame that the Schwab 1000 was available. And you can see about a 16% and about 16%. Remember, this portfolio number 2 is the SPY. That's the S&P 500. You're actually ahead of the S&P 500 in that time frame. So you get a better purchasing power by having it be a lower dollar per share. You actually get a higher dividend yield, which I'll show you on the next tab, and you're getting a better return overall. So that's crazy. Let's go to the annual returns. We actually see that the yield, again, from portfolio 1 is about 1.7, 2.37, 1.88, and yet, it beats continuously just about, other than, 2018, because there's a shortened year, or sorry, not a shortened year, but okay, 2018 it did beat. 2021 so far, but remains to be seen. Either way, look, it pretty much beats the market. This is the market. The Schwab, the 1000 is a little bit better than the market in most cases, or it's about equal. It's not far off. They're not more than one basis point off from each other. So anyway, this was my 2-position portfolio that's up about 73% in the last 2 years, and it is a 50-50, 50% Microsoft, 50% Schwab SCHK. And I hope you guys like this video and subscribe.